What's up everybody? Welcome to the Stocks channel. My name is Corey and today we saw a bounce in the stock market across all of the indices. Where are we likely going from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so on SPY we did see a bounce today going up 1.2%. Remember yesterday we closed right below that 50 EMA, which was a very strong support area, which was also where that support trend line was. Right around 405 was where that support level was. And we did have a resistance level right around 408. So today's price action did confirm that we did get a bounce off of that support level, and we did close above the next resistance at 408. However, as you can tell, intraday we did test the next resistance level at 412, and that level did hold up as resistance, and SPY could not break above it. So right now we still have critical resistance above at 412 with downside support at 408 and right around 406. Remember, this is a trend line, and each and every day it does go higher for the price action. So right now this was about a 4% pullback from the high, and a 4% pullback is a pretty decent healthy correction. However, don't forget that we still have the gap below right around 400, and it is still possible that we continue to go lower to close that gap. So the critical support level we need to break below is right around 406, and then if we're getting below 406, it's very likely we're closing the gap at 400. Now to the opposite direction, we do have a gap above that won't close until we get to about 417.80. Remember, this is the battle of the gaps. Both of these gaps are likely going to get filled. So right now, watch the critical support level on SPY at 406, and the critical resistance level is going to be right around 412. If we break back above 412, we're still going to have resistance at 415 and the gap close at 417.8. Now above that gap, if we continue to break out and go higher, we're already looking at brand new all-time high potentials at 423 and 427. So right now, as long as we're trading above the 50 EMA, we have not invalidated our upside price targets just yet. We did lose the bull trend, but that's completely normal to lose a bullish trend during a correction. Remember the last time we had a correction back here in March, we did also test the 50 EMA and then we resumed the bullish trend. So on a weekly chart, we are still in a bull trend and we have still yet to close the weekly candlestick. So where we close the week is going to be very critical to maintaining the bull trend on the weekly chart. So right now on the daily chart, the bulls have a lot of critical resistance to break at 412 and 415. The bears need to break critical support at 408 and 406 to try to drive SPY down to close the gap at 400. Now, if we do get down here to close the gap at 400 and don't see a giant bounce off of this level, that is going to be a very bearish indication for SPY, and it does mean that we could have likely seen the top at SPY levels of 423. So the price action and how it behaves at these levels is going to be very critical. And if we don't see big time buyers stepping in at critical support, that means this likely could be the end of the bull run and we are going into a bear market. But right now we're still trading above critical support, so it's way too soon to say that we're already going into a bear market. This is very likely still just a short-term correction and then a continuation of the bull rally until proven otherwise. So right now we're going to draw our line in the sand at this bull market at a gap close of 400, and if that level can't hold up and can't sustain a nice bounce and a sustainable bull rally off of that level, then we are going to start looking at a bear market possibility for SPY and the chance that we did see the top and we're going much lower. Remember, if I zoom out here on SPY, we do have trend lines that we could test, and we do have gaps that go all the way back to last year, and those are likely going to get filled during the next major correction or the next bear market. So right now it's way too soon to say we're going there just now because we're still trading above critical support, and as long as the critical support is holding up, there's still hopes for a bullish rally to go back into new all-time highs. So remember to stay flexible, and remember the bears and the bulls don't have any trending to their side right now. So watch the price action at these critical levels because that's going to be the quickest indication of which trend is most likely going to take over. If you're not sure what to do right now because the market is very volatile and choppy and it is in a very indecisive area, then just take a break from trading and come back when there's a decisive trend. This is not the time to be guessing, and this is not the time to be over leveraging your accounts. So be patient, and if you're not sure how to trade this market, just take a break and come back later. Next up is the NASDAQ 100 QQQs ETF, and we see the QQQs bouncing, going up 0.77% today, and we did find resistance right at that critical level at 320. Remember, I had a critical support level at 316 to finish out this potential C wave, and we did see a bounce off that level. I'll go ahead and draw this ABC structure for you yet again, and remember it was possible that we bottomed out in this C wave right around 316. Right now, all we know is that we did get a confirmation bounce off that level. It's still possible that this C wave could come down to about 309, but we would need to see a confirmation break below 316. So right now the critical support level for the QQQ's bulls is going to be price action above 316. If 316 breaks down, it's going to be very likely we come back down to 309. So 316 is very critical, and to the upside, if we did bottom out in wave C, we will start blasting through upside resistance and possibly forming another 5-wave structure that could take us to new all-time highs on the QQQs. Remember, after an ABC correction, we could resume the trend, and if you zoom out, we are still in a bull trend. The last thing we saw the QQQs do was form a higher high, and now we're potentially putting in a higher low. So you really have to zoom out, and you have to remember that the bigger picture here is still a bull market. Yes, this has been a nasty correction, which is over 8% off the all-time highs, but after corrections, you typically get a resumption of the larger degree trend, which is still bullish. Now, if we start breaking down and forming lower lows, we won't know that until we get down below 310. So you can see why the critical support level at 309 is going to be the key. And if we never even test 309 and we bottomed out at 316, don't forget that will be a higher low. So that'll be a scenario of higher highs and a higher low. Coming off of a major correction, which is pretty sizable, we could easily go back into a bull market. So keep an open mind and don't get overly bearish on the market just yet, because we haven't had any major technical breakdowns in the market that hint that we are already in a bear market. Remember, ARKK ETF is in a bear market, but the indices are not. So on the QQQs, watch upside critical resistance levels at 320, 324, and that 50 EMA at 328. If the QQQs can start getting back above 324 and then get a close back above the 50 EMA, that's going to be a very bullish indication that we are likely going back into another bull rally. However, this 324 level is going to be very critical, and if the price action cannot break above 324, that's going to heavily increase the probabilities that we are not yet done going lower, and we could still come down to QQQ's levels right around 309. So remember, the QQQs are the most beat up right now because the tech sector got hit the hardest. You can see all of these moving averages did roll over and they're all negatively sloping. So any more bearish price action below the 50 EMA is only building up more and more bearish trending. The more trending the bears get, the more likely they're going to continue to short at resistance levels and driving the tech sector even lower. So be very aware of the downside potential at 309 and understand that it is still possible that we did see the bottom of the C wave at 316. So the price action is going to be so critical to watch the support levels at 316 and watch the resistance levels at 324. Next up is the Dow Jones, and we see the Dow Jones bouncing very hard today, going up over 1.3%. The Dow Jones did close below that 337 support level yesterday, but today we got a monster bounce off of that level, and we did find resistance right around that 20 simple moving average around 341. As you can tell from these moving averages, the bull trend is in jeopardy of getting reversed and start heading down into a bear trend. However, it has not yet crossed to the downside, and if the Dow Jones can get price action back above that 20 simple moving average, it is still possible this bull trend continues higher. So watch the critical resistance level right around 341.7, because if the bulls can close over that level, we could be going back to 347 and 350. Remember, the Dow Jones is still very strong, and it still has yet to retest the support level at the 50 EMA. So on a breakdown of support below 337, we're looking for a 50 EMA test right around 334. If that level fails to hold, we're more than likely going to come down here and fill the gap at 331.50. So as you can tell from the volume, there's still plenty of buyers and sellers, and eventually we will see the tide shift and we will see the bears take over or the bulls take back over this rally. Next up is the Russell 2000, and we see the Russell 2000 going up 1.84% today and closing back above that resistance level at 215. So 215 is now going to be a critical support level, along with 209 and the support trend line at 206.50. Upside resistance is going to be the trend line breakout at 219, the 50 EMA at 221, and the 20 simple moving average right around 223. Remember, the Russell 2000 is not in a bull trend or a bear trend, so watch the critical support level, because if it does start breaking down, we could see the Russell going back down to retest more support levels. As you can tell from these Bollinger Bands, they are expanding and the market is definitely getting more volatile. So remember, as you're trading, to get in and out quickly, and don't make any overly bullish or bearish assumptions during this time, because we're going to see wild swings in both directions. Next up is the ARKK ETF, which went down today, going down over 2.6%. We did see ARKK bouncing a couple of days ago, but we did find resistance at 106. The next support level on ARKK should be a very strong support level, and it's going to be right down here around 96.8. We got very close to that level today, and we did see some type of bouncing. But remember, if this level breaks down, ARKK is going much, much lower. The next support level on ARKK is all the way down in the 80s. So right now, watch the critical resistance level on ARKK at 106 and 109 with downside support at 96.8. Also remember that ARKK is in a full bear trend because all the moving averages are stacked to the bear side and the price action is below all the moving averages. So in a bear trend, there's going to be a lot of downward pressure on the price, and any pop off of support into resistance is most likely going to get shorted, and we could see the price action continue to head lower. So remember, if you're taking a long trade on ARKK off of the support level at 96.7, if that level breaks down as support, you want to get out because it could be going much lower. All right, next up is the VIX, which is our fear indicator, and we see the VIX getting crushed today, going down over 16%. Also remember that tomorrow is Friday and we typically see the VIX going lower. I went back and checked this. In the last 8 out of 9 Fridays, we did see the VIX going lower. So those are good odds that we should see the VIX continue to trend lower going into tomorrow. And we are still trading below that resistance level at 24.8 after we did break out above that level yesterday. So as you can clearly see now, that Bollinger Band squeeze that we had at the end of April is finally firing, and we see these Bollinger Bands rapidly expanding as the VIX spiked to the upside. Now that the VIX already did spike to the upside, we could see some give back, and don't forget we do have a VIX gap down here around 19.8. So the lower the VIX goes, we would expect to continue to see a relief rally in the stock market, which overall would be bullish going into tomorrow. So watch the VIX closely, and if it gets back down below 21.6, we could slowly but surely start to see the beginning of another bull trend. However, if the VIX continues to spike higher or stays elevated in the mid-20s, that is still going to be a very volatile market, and there's still going to be a lot of volatile price swings in both directions. Remember, volatility does not only work to the downside. You're still going to get monster rallies in the upside and the downside while the VIX is this elevated. So critical VIX levels are going to be back above 24.8, would be a very volatile market. And below 21.6, we're going to start to see the market cool off and start relaxing a little bit. Next up is gold, and we did see a bounce in gold today, and we're still holding on to the full bull trend. Gold is still going to have resistance around 1829, but a break and close over that level could mean we're going to the next price target at 1876. Critical support on gold is going to be 1798 and 1782. On silver, we also had a minor bounce today, but we're still holding on to the full bull trend. Upside price target on silver, which we still have yet to break, is 27.6. with the resistance trendline breakout at $28. Downside support on silver is right down here at 26.5. Next up is Bitcoin, and we did see Bitcoin having a huge sell-off today, but it did hold up above that support level at 48,600. If 48,600 breaks down, don't forget that we do have the next support level at 45,000, and if 45,000 breaks down, we're likely going to see Bitcoin back at $30,000. However, if these support levels do hold up, that would be very bullish for Bitcoin, and it could start going back up very soon. So watch critical support at 48,600 and 45,000 with the critical resistance level right around $55,000 here. If we can get back above 55,000, that could be a nice bullish trade to the next all-time highs, but we would still need to break out above resistance at 61,000. So watch Bitcoin very closely, and remember we were very close to going into a full bull trend before this sell-off. So right now there's no trending in either direction, and it actually does look more likely that this could evolve into a bearish trend. If you look at these moving averages, they're actually currently stacked all to the bear side, so these support levels are extremely critical for the bulls to hold the price action above these levels. Next up is Amazon stock, which went up 0.3% today and still holding on to that critical support level at 3140. The upside resistance levels are going to be 3206 and 3261. And if we do break down below the critical support level at 3138, look out below because we could be coming all the way back down to about 3030. Next up is Tesla stock, and we see Tesla going down over 3% today, and we did break down below that support level at 594. Remember, the next support level is at 557, and it did look like we were very close to testing that level today, and we did start seeing a bounce. If 557 does break down, look out below because Tesla is going all the way back down into the 400s. So 557 is an extremely critical support levels for the bulls to try to hold up above. Critical resistance is going to be above at 594, 618, and 669. Next up is Apple stock, which went up 1.79% today, and it did get rejected at that resistance level right around 126. Apple still has a gap above the fill that won't fill until we get to about 126.8, and don't forget that Apple is in no man's land. If it can't break above 126, it's likely coming all the way back down to 119. So the 126 is critical resistance with the next critical resistance level right around 128. So look out below if Apple can't break above resistance because it's likely coming all the way back down to the support level at 119. Remember, Apple is building up bearish trending and the price action is below all of the moving averages, so the bears do have the benefit of the doubt to drive the price lower to the next support. Next up is the financial sector, which had a very bullish day today, going up 1.61% and closing back above the 5 EMA. The financial sector is still holding on to that very strong bull trend and it's still looking very strong. Next up is the industrial sector, which also had a very bullish day today, going up 1.87% and closing back above the moving averages. We still have a bullish trend on the industrial sector and it's still looking strong. Next up is the healthcare sector, which went up 0.9% today, and we do see the healthcare sector closing right on top of the 5 EMA. The healthcare sector is starting to lose some bullish energy and some bullish trending, but it's still looking good in the longer term. On the energy sector, we dropped 1.22% today, but we did look like we're holding up above that support level at the 13 EMA. The energy sector is still in a full bull trend, and it does look like it can continue to go higher from here. So going back to the S&P 500, you can still see that we do have strong sectors. The financials, industrials, healthcare, and energy sector are still looking very strong. If the tech sector can continue to rally off of the lows, we could see the S&P 500 going to new all-time highs yet again. Remember, this bull market is not dead just yet, and this is just a correction before we possibly resume the upper trend. So watch that critical breakdown at SPY levels of 406 because that could start telling us that we are going into a bear market. But right now, the bull market is still alive, and this is just a correction, and it still could be a buying opportunity. Also, remember on the Stocks Channel Discord, I'm doing intraday updates and analysis to help you navigate this market and stay on the right side of the trade. I'm also bringing you new trade ideas weekly to help you absolutely crush this market. In these volatile times, there's going to be a lot of great trade setups, so now's a great time to be a Discord member. All right, next up, let's check in on Disney stock, and we did see Disney stock going up 0.28% today. That's 2 days in a row for Disney stock closing below that support level at 178.8. Remember that Disney did report earnings after the bell, and it currently is trading all the way down about 171. There is a gap to fill right around 171.74, and there is a support level down here around 170.7. So unfortunately, this did break down out of the support level to the downside, which does mean that Disney could be going into a bear market. So it's going to be very critical to see how these support levels hold up. And if you are in this trade through earnings and you were looking for an exit, wait for a bounce off of support and a retest of resistance, and then you could take your loss at a much higher price. So we'll continue to cover Disney for a few more days, and if it can't get back above these levels, we will have to cut it loose. So thanks for watching, everybody. Remember to stay flexible in this volatile market, and as always, I will see you in the next episode.